You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 13th day of February, 2024. That means tomorrow's the 14th day of February. So, if you have not at least gotten her a card or him or something, you still got time. That's the good news. Thanks for joining us on this pre-Valentine's Day. Whoever you are, wherever you are, well, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. The first one, that's a private one. That's for our members only and those taking our 1 week free trial. If you have not taken the 1 week free trial, you can just go to mytradingiq.com, and at the very top of the page, there's a link. It says 5-day free trial. No credit card required. Click the link, fill out the registration form, and you'll get a reply from us pretty quick. Just what we want to do is we want to get your desktop set up, get your indicators indicating, and then the following day, which would be tomorrow if you take action today, that's when your trial will start. So of course you go, well, hey, wait a minute, tomorrow's Wednesday. I'm going to only get 3 days. Not true. You get 5 consecutive trading days, even if it stretches over a weekend. In fact, even better, because it gives you some more time to get familiar with the indicators. You go, yeah, but the market's closed over the weekend. Not all markets. And on the TradingView platform, you've got access to a couple hundred different markets around the globe. There's something moving somewhere. So, mytradingiq.com, top of the page, click the link. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There are 2 different ways to join this afternoon broadcast live. Here's the best way. You only got to do this once. Go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, what will happen every trading day? You get an email about an hour before this broadcast starts, and in the email you'll find a link. So at 12 noon Eastern, click the link in the email, and it automatically logs you into our platform. The benefit of doing it that way is you have access to the question box, so you can ask questions and participate in the discussion. Now, there's going to be days that you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy and can't join live, but you do want to get caught up later. You can do that too. I'm talking about our YouTube channel, youtube.com/CFRN. Easy to remember. You already know the YouTube part. So really all you need to remember is /CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting as they call it in the biz, but we also archive each and every daily broadcast. Currently, there's over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but you can actually see how we've evolved over the years. Thanks to YouTube, you can scroll back 6 weeks, 6 months, a year, 2 years, 3, even more. Now, obviously, you're not going to listen to all of them or watch all of them, but just pick a couple days at random. Listen in a little bit. You'll discover the thread of connectivity, the thread of continuity. It's woven through each and every daily broadcast and our very vibrant trading community, who you'll get to know when you take the free trial. Because the free trial is not just access to the live training room every trading day for 5 consecutive days. You actually have access to all the resources that our lifetime members have access to for those 5 days. The only thing you don't have access to is the members only workshop on Thursday night at 8 p.m. Eastern. But other than that, we treat you just like a lifetime member, 5 days at our expense, so you can make a well-informed and intelligent decision as to whether or not trading is right for you before you have to spend a dime. And that's a pretty good deal. So let's get going with our daily devotional, word of prayer. Then Michael will join us around 12:45, 12:50. He'll give us a recap of what happened in the live training room. And then we'll go live on the TradingView platform for 30 minutes. And then we'll wrap things up with our good word for the day. Our topic that we started last week: how to stop worrying. It's a tough one. Our scripture today is Philippians 4, verses 6 through 7. And I'm going to share with you from the Message translation. Don't fret or worry. Instead of worrying, pray. Let petitions and praises shape your worries into prayers, letting God know your concerns. Before you know it, a sense of God's wholeness, everything coming together for good, will come and settle you down. It's wonderful what happens when Christ displaces worry at the center of your life. Philippians 4, 6 through 7. So, how to stop the worry cycle? Yesterday, day 2, we learned a lot about worry. So, now that we know, what do we do with what we know? We have to recognize when we're worrying and replace those uninvited thoughts with ones that not only bring a good return, but also help us live in peace. Philippians 4, we're told not to be anxious or worried, but to pray instead. Easier said than done, right? Author Max Lucado said, "No one can pray and worry at the same time. We typically choose worry instead of prayer. It's just more natural. It's sort of part of the human condition, I guess. Let's change that and make praying our go-to instead of letting worry overwhelm us. The more we pray, the less we'll worry. Entertain healthy thoughts. Worry often causes us to think about a million different what-if scenarios that most of the time never even happen. When we do this, we must arrest our thoughts, or as Paul said, take our thoughts captive and stop them in their tracks. Imagine yourself literally grabbing that worrisome thought from out of thin air. Instead of going back to that thought, use God's word to supply you with truth, because it is our source of hope. Next, live grateful. Most people who live in a state of gratitude are typically joyful. You know what else? They don't usually spend their time worrying. So look for ways to be grateful. Maybe it's a daily journal where you write down a few things each day. And every day we can thank God for His creation, for it reminds us of just how awesome He is. Finding freedom from worry takes time. We've created this habit of worry, so now let's uncreate it by employing these ideas. Even though this takes time, doesn't mean you won't find success. When you stop worry in its tracks and pray instead, that's success. If you fail on the next thought and worry instead, show yourself some grace. Just start over. The more honest we are about how much we worry, the more we can eradicate it from being a normal part of our lives. Worrying is normal, so let's strive to go against the norm. Let's choose to pray instead. Entertain healthy thoughts and give God thanks for the blessings in our lives. I want you to think of the one thing that you typically worry about the most. If it's caused by something you're listening to or watching, consider limiting or eliminating that source. Come up with a prayer for this particular worry. Whenever that thought comes to mind and you're tempted to worry about it, voice your prayer instead. Don't be discouraged if you have to do this 50 times a day. Change your mindset and recognize that you're now praying 50 times more a day. Join me in a word of prayer. Heavenly Father, we come before you today. Our hearts are filled with gratitude and trust. Thank you for the assurance that we can bring all of our concerns and anxieties to you in prayer. Help us to release our worries and fears into your loving hands, knowing that you care for us deeply and are always attentive to our needs. Grant us the faith in your perfect timing and provision. May we be diligent in seeking your guidance and direction in every aspect of our lives, including our careers, which for many of us is the business of trading. Lord, fill us with your peace that surpasses all understanding. May this peace guard our hearts and minds in Christ Jesus, keeping us grounded in your truth and steadfast in our faith, even amidst the uncertainties of all that's happening in the world right now, from Capitol Hill, Wall Street, to the southern border, to Ukraine. There's a big list. I could keep going. But Lord, you know what we're dealing with. So we trust you. Let our hearts be filled with thanksgiving and confidence that you're a faithful God. May every decision we make in life and in trading be guided by your wisdom, and allow our actions to reflect your love and grace to those around us. It's in Jesus' name, believe and pray. And everybody said, amen. Amen. Well, happy Tuesday. Hope it is a happy Tuesday for you. Wherever you are. Again, tomorrow's Valentine's Day. Get that special someone, whoever that someone is. I guess in honor of the holiday, the markets, well, it's not till tomorrow, but markets got a leg up on the game and went red today. That's the official Valentine color, red, right? Now, the beautiful thing about trading futures is you don't care if the markets go up or go down, as long as they go somewhere. Because with futures, you can be long, short, long again at the drop of a hat, if that's what the chart in front of you tells you to do. Don't forget to pick up your hat. All right, starting here in the U.S. with the cash markets, or the indices, as they're called. The Dow is down 458 points. That's a drop of over 1%, almost 1.25%. The NASDAQ is down 235 points, almost 1.5%. S&P 500 is down 60, almost 1.25%. And the Russell 2000, man in the street, down 58 points. That's almost 3%. Now remember yesterday the Russell was leading to the upside. Well, things changed when that news came out this morning. And you'll see what I mean when we go to the charts. It was a strong inflation report that rattled Wall Street. In the commodity baskets, crude oil up $1.04, trading 77.96 last. That's a gain of almost 1.5%. Gold down $24.40, trading 2,860 last. It's a drop of 1.25%. Silver down 56 cents, trading 22.20 last. That's a drop of 2.5%, over $2,500 per contract traded. In the Asian markets at the close, the Nikkei posted a gain of 1,066 points. That's almost 3%. The Shanghai gained 36, and for the Shanghai, that's a gain of 1.25%. The Hang Seng dropped 131, almost 1%. In the European markets at the close, FTSE down 61, 1%. The DAX down 156, 1%. CAC down 64, 1%. So we had a mixed day in Asia. It was a red day for the UK, and it's a big red Radio Tuesday here in the US of A. Wow. Gold even dipping below 2,000 an ounce for the first time in 2 months on this inflation data. The dollar hitting a 3-month peak. You know, once upon a time, good news sent the markets higher, bad news sent the markets lower. It's a crapshoot. That's why we don't encourage you to trade news events. But the other folks get slaughtered. And then when the markets resume their normal rhythm, just step back in, get your goal for the day, put the mouse away. Now that's the simple way. Trading's not easy, but it can be simple. Or you can choose to make it very, very hard. That's entirely up to you. Logic 247. So far this week, we've issued a whopping total of 6 alerts due to these extreme market conditions. The number of alerts issued on any given week averages about 50. I think the biggest week we ever had was just over 100. It might have been 100 right on the nose. Last week might have been the smallest week in 288 weeks. We're now in week 289. Over the last 289 weeks, we've issued over 16,000 individual handcrafted alerts. This week, since the markets opened Sunday night at 6 p.m. Eastern, remember there was only one alert that went out Sunday night. That was gold. Got stopped out, and then it went on to, hit its target. But that gets recorded as a stop out. Since we just record for the official recap, whatever the first trigger does. I talked about that a little bit yesterday. And then last night, the markets just didn't look right. Now, let me be honest. Did I know today we were going to see what we saw today? No. But we did talk about where price would probably go yesterday. And so when we go to the chart here in a second, we'll look at what we talked about yesterday and what that's given us today. So out of the 6 alerts we've issued this week, we're still waiting on the outcome of 2. 4 actionable alerts, of which 1 got stopped out. For 25% stopped out. Now, over the last 289 weeks, and over 16,000, I think we're like 16,100 individual alerts we've averaged on a weekly basis 20% or less of the alerts being stopped out based on market structure, and a very simple process that we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. I think last week we wrapped the week up with 15%. I think that's how it went. Again, we didn't have a lot of alerts last week, and after this huge sell-off today, it might actually create some pretty decent trading opportunities. Let me take a look at something here real quick. Well, I hoped it would be real quick. There we go. Yeah, the last alert issue was 16,085. But last week, we had a total of 23 alerts issued. It's probably our smallest week ever, of which 3 never triggered. Gave us 20 actionable alerts, of which 3 or 15% have been stopped out based on market structure and that simple process we teach all of our lifetime members in their unlimited one-on-one mentoring sessions. Now, along with Logic 247, we also have our original alert service, which goes back much further than 288 weeks, our concierge trade alerts. Yeah, they're a little bit different. You see, the logic alerts can come out anytime around the clock, 2 a.m., 2 p.m., futures trade around the clock, and we have traders around the globe. But the CTAs are different. The logic alerts have an entry price, an initial target designed to help you get your goal for the day, a second target, and sometimes a third, a fourth, sometimes a fifth, and then a final trade to target. If it's a short alert, the final trade to target will be the weekly zone below. If it's a long alert, the final trade to target will be the zone above. See, on the logic alerts, I look left for you to spot potential obstacles to the move. Previous swing highs, which can become resistance, previous swing lows, which can become support. The purpose of the alerts is they're not designed for you to just trade the alerts and, not have to go to all the trouble of learning how to trade. That's not the point. The point is to help you by getting the alert, going to your 30-minute chart, seeing the window of opportunity that the alert represents. The more times you repeat that process, pretty soon you start to see the windows of opportunity yourself before I even have time to post an alert. We want you to become self-sufficient. If your goal is to trade for a living, that's not going to happen as long as you're dependent upon someone else to tell you when to get in and when to get out. If you learn how to read the chart, learn some very basic rules that Michael teaches you every morning in the live training room, and use your 30-minute chart as I show you as a roadmap to get you to the place where you execute the way Michael teaches you to execute, then you're well on the road to becoming self-sufficient. The CTAs don't come out around the clock. They're published as a static report shortly after the Globex Open each evening. Last night, got them out at 6:15. So 15 minutes after the markets opened last night, all of our members and trial members got this list. Okay. Now, because this broadcast is open to the public, if you want to grab a screenshot, you can. If you're watching this after the fact on our YouTube channel, youtube.com/CFRN, you can just hit pause and jot down numbers important to you based on the markets that you trade. The first thing you do when the report is published, go to the 30-minute chart of whatever markets you trade or are learning how to trade. And on your 30-minute chart, make a note of where price is at the time the report comes out. We'll use the ES as an example, okay? But no matter which market it is you trade, when this report is published, price will be between these two numbers. So make a note on the 30-minute chart where price is when the report comes out. Then draw a line in the sand at the long target. Draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. The BBC is the green line you'll see on my charts. When price gets above the green line, we're bullish and anticipate higher prices. When price gets below the green line, we're bearish and anticipate lower prices. Every market, every time frame. Daily, weekly, monthly, hourly, 30-minute, 5-minute tick chart, range chart, doesn't matter. Prices above the BBC, anticipate higher prices. If price is below the BBC, anticipate lower prices. That part's super simple. Now with the CTAs, this is where you're learning, okay? You've already looked at the logic, okay? So now you look at the CTAs and you look left yourself and spot potential obstacles. Previous swing highs, swing lows, like we just discussed. And over time, you'll learn how price behaves at a weekly trading zone. That is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC, it's trying to get to the zone overhead. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones for our members every week since December 14th of 2009. They come out Monday morning, 6:15 a.m. Eastern. You just got to resist the urge to make it more complicated than that. As long as you know which way the wind's blowing, it's pretty simple to reach your goal for the day. So let's take a look. Which way is the wind blowing? We call that a southerly. I know what a nor'easter is. Is there such a thing as a sou'easter? I don't know. Anyway, institutions aren't doing a whole lot of buying today, are they? Yesterday we talked about the importance of this 50% fib extension, and price did poke through it. But I said what's really important, guys, is how we close. If you missed yesterday, you think you should go watch it, listen to it and watch it. You can do both at the same time unless you're driving. I said if price closes below the 50, okay, because as you can see that wick, we had a green candle all the way up to 50.66.50, okay? But by the time the session closed, what happened? We knew, and we talked about this yesterday, that the obstacle the market would need to overcome would be the step line and blue and climbing. That's support times 2. And that if price could get below those first area that we would look for support would be at the 38% fib extension. As you can see, we hit it, and we're a little off the low of the day. But we had quite a crash, I suppose some would call it. We just know that's how markets work. Leg retrace, leg retrace, leg retrace, leg retrace, leg retrace. Now, that means the 50% fib extension, that might be the high for a while. Okay? The 24% fib retracement is right here. But the next area for support is the BBC, the green line, stands for bull bear cross. Bearish below it, bullish above it. Okay? Price always reverses to the mean. Always. And the pullback to the BBC holds more often than it doesn't. It held here, it held here, it held here, and it here, and here. Here it didn't hold. So while we know that the pullback to the BBC holds more often than not, we also know that eventually price will trade through it. That keeps the markets fluid and tradable. Okay. So we hit the area that we talked about yesterday as potential support. But a lot of things had to happen. Remember, when we were doing the broadcast yesterday, we had a green candle. In fact, I adjusted the upper fib line to embrace that big green candle we had. But look how we closed. And then shortly after the open last night, the markets attempted to go higher just a little bit and then collapsed. Hit the 38% fib extension, bounced. So if you were trading short, you should have been prepared, you should have been ready, because the information's right here. Now, none of us trade a daily chart, let's be honest. But guess who does? Institutions, the people who actually move price. Why do I say that? Because of their account size. They trade in size that literally moves the market. Okay? And when they stop buying, price declines rapidly. It takes financial commitment for price to rise. But for this to happen, all it takes is for the institutional buyers to hit the pause button looking for a better price. Remember, we talked about that yesterday too. Looking for the better price. Now, is this a better price than what they could have bought at yesterday? Yeah. Would this be an even better price? Yeah. Would this be an even better price? Yeah. This, absolutely. So at what point will they step in mass, in force, and start bidding the market up? Bottom fishers came in at this 38% fib extension, but do they have enough commitment to reverse this market? Okay. Now, on this last pullback to the BBC, we hit the 24% fib extension, so we didn't quite touch the BBC. So again, how we close today will be extremely important to where we head over the coming week and months. This is going to be a crazy year, guys. You know, I'm not going to turn this into a political thing, but I think everybody knows we have a presidential election coming up, probably the most controversial election ever, and from both sides of the aisle. I mean, it's I can't say that word. We used to say it in the military. It's not family friendly, so we'll just pause. So, what do we expect from here? Well, We either expect buyers to come in and start driving this thing up, or eventually we're going to break the 38. And you see these lows over here, they're lined right up with the daily BBC. Now the pullback holds more often than it doesn't, right? But eventually it trades through. See, we had been in a decline for some time, but once we traded through the BBC, look at how far we traveled before we got a pullback. Then we got another little pullback. Now we've gone quite a distance without physically touching the BBC. Watch the close today, and if it's below 49.66, then anticipate another 30-point drop down to about 49.36. I call it 49.40, just to be safe. All alerts, logic, and concierge are created on the 30-minute chart. That's what you're looking at here. The vertical line separates today, Tuesday, from yesterday, Monday. This was the opening candle last night. So 15 minutes into the life of this candle is when all of these targets were published. Okay. So price opens, rolls sideways, and now it's trapped. Support below, resistance overhead. Red and falling turns to blue and climbing. So we push up to the BBC and the weekly trading zone. When price rises to a weekly zone, we expect resistance until proven otherwise. When price drops to a weekly zone, like it did yesterday afternoon, we expect support until proven otherwise. And that's how price moves from zone to zone to zone to zone. Now, this is just a huge anomaly, okay? And it's also why we highly suggest that you don't trade the news. We're looking for high probability, low risk trade opportunities. Gambling is not what we're about. Now it is 12:45, so Michael should be here momentarily. So Michael, whenever you're ready, let me know. On the Dow. Flat. We made a run, okay, at the zone overhead, but we couldn't take out this high from yesterday afternoon. Just look left. That sent us down below the BBC, down to the short target. Support. This zone is 65/70. The low is 75, so 5 ticks, we missed it by. Actually, there's no ticks in the Dow, they're just points. And so support sent us to resistance. Remember, when price pulls up to the BBC, we expect resistance until proven otherwise. When it drops to the BBC, we expect support until proven otherwise. Okay? So 1, 2, 3, 4, 5, 3 hours. These are 30-minute candles. So you got 6 30-minute candles. Tried to break through the BBC. Couldn't do it. Here comes the news. This is 30 minutes. And look where we found support. At the zone. Which bounced us almost back to the zone overhead. And then on the next move, we came down through that zone. Now we've retraced back to the zone we sliced through. Only 3 things happen at a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times the slice. On a slice, what will typically happen is when price slices through the zone, it will retrace. When it runs out of steam, it'll retrace to the zone it sliced through and then continue in the direction of the slice, which is basically what it's done here. It attempted to pull back to the zone here off of this slice, but buyers weren't buying. I mean, they bought this bounce and they said it. So now we've got a step line that's crossing red and falling. What does that tell us? It tells us that we may have put in a low and that from here, price will attempt to retrace back to the BBC. Remember, price always reverts to the mean. In our case, the mean is green. It's called the BBC, bull bear cross. On the Russell, here's where we opened last night. Red and falling turned to blue and climbing, so we had this one candle right here, opened at 2053, ran up to 2058, 5 points. Okay, we didn't get all the way to the target, but there's a 5-point 30-minute candle. Okay, then price drops below the BBC. Blue and climbing turns to red and falling. One is bullish, the other bearish. And so, you ready?
I'm ready.
Okay.
I'm ready.
All right, guys, we'll pick up with the Russell once Michael gives us a recap of the live training room. Then we go live for 30 minutes on the TradingView platform, and we will continue.
All right. Here we go. Here we go.
All right. Looks good.
Thanks. All right. Good afternoon, everyone. Today is Tuesday, the day before Valentine's Day, the 13th day of February, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on this button right here, the purple button right down here. Click on that. Now, no credit cards required for the free trial. All right, it really is free. Click on that. You can be brought to this registration page. On this page, all that we ask for is your name, your email, and your phone number. You can fill out all this. If you have TradingView, you should give us a TradingView login ID. If you have a NinjaTrader, you should give us a NinjaTrader machine ID. Okay. That's all you need to do to take the trial. Once you do that, you'll be sent all the information you need to get into the room in the morning. Okay. And this is the spreadsheet. Now, the spreadsheet goes back to January 2nd of 2013. It's got our daily results going all the way back there. If you're going to read it, you have to read all the CFTC risk disclosures down at the bottom. Today is the 13th day of February 2024. Today we make 45 ticks in the MQ, 26 ticks on the Russell, and 8 ticks on the ES. That put us at $455 per contract on the morning session. Today it took 10 minutes and 1 trade to get to the goal for the day. That we're up $1,400, and we took a total of 21 trades this morning. So on the month now, we're at $3,227. That is over 9 business days, averaging $358 per contract per 2-hour trading day. On the year now, we're at $12,815. That is over 30 business days, averaging $427 per contract per 2-hour trading day. Now, if you were to follow the 2420 blueprint, which I started in January of 2023, and added 1 contract per month, that brings us to 14 contracts this month. So far this year, if you quit trading when you get your goal for the day, that is part of the plan. Trade until you get your goal for the day and then stop trading. If you were to do that so far this year, we've only had to work 12.31 hours so far this year. And in those 12.31 hours, you would have averaged $4,707 per hour. Now, that is because we started off the year with 13 contracts. In January, we went to 14 this month. All right, so we're on our way to getting up to 15 contracts at the end of the month, the beginning of March. We are $10,000 away from getting to 15 contracts. We need to hit, we're actually more than that. We're about $12,000 away from getting to 15 contracts. We need to hit $28,000 this month, quitting when we get the goal for the day with 14 contracts. And I expect we will have that without any issue at all. All right, so let's get into the trades that we took. Crude oil, we didn't take any trades today, none. You can see the whole day is right here. This is our whole day in crude. We had a blue arrow going down into the zone right there. We didn't take that. It was actually coming out of the zone. If we would have taken it, it would have been a break-even trade probably. Then there were a couple of black arrows in here as it went from here to here. But because of the direction change, I would have been waiting for a pullback to the ribbon, and we never got one. And then we get into the break, and we never got a pullback to the ribbon even during the break. And this one green arrow right back here during the break. Nothing on crude today. It was just, you sure can. For today? Oh, okay. Okay, let me go and reschedule the other one. I went and did them all again last night. Let me go out here. That's, yeah. Well, one of them will go away. The one that's that I don't actually start will go away. But let me just reschedule it for tomorrow or whenever I don't have one scheduled for. Hang on a sec, because I already started the other one and got it ready to go. Let me just go in here. Community and items. Yeah, I think it was like 3 o'clock this morning. I went and scheduled them out for the week, so it doesn't surprise me that I made a mistake at 3 o'clock in the morning. Right, so it's not showing any in here right now. Or yeah, I wasn't clicking. I clicked on the wrong thing. I clicked on overview, not live stream. Sorry. Okay, so going down to education, to off topic. Here it is, upcoming streams. I was wondering why it had 2 of those there. All right, so let me just reschedule this one for next week. Next Monday. It's good. There we go. All right, now when you refresh, you should only have one. Okay. Yes. All right, thanks. Okay. Yep, it's all ready to go right here. I just get to hit start stream on that one. I do that because if I run over the time, it goes away and I can't get back to it. So, all right. So you can see the crude is pulling back down to test the ribbon. We're in the oversold. We haven't hit the ribbon yet. So if you got an up close on this and pulled it out of the oversold, it'd be a black arrow. If it does hit the ribbon and it doesn't hit the black in the ribbon, then it'd be a blue arrow on an up close that pulls out of the oversold. If it hits the black in the ribbon and gets onto the oversold, it'd be a green arrow. Just telling what's likely to happen over there now. All right, so let's look at the Russell. We did have some trades on the Russell today, and we did pretty well with it. Let me move it all the way back to the beginning. There was a lot of movement in the Russell at the very beginning. I don't know what just happened to price on here. Something weird just happened. All right. So there should be scale price chart only. Still on a 7 range. Let's go here. Go to that. I'll go back to a 7 range. I don't know what just happened in here. But something did, and I lost all my price data. Well, anyway, let me just say what happened on the Russell. We had 6 trades on the Russell. We got our goal for the day on the very first trade on the Russell. We picked up 20 ticks on the very first trade. Then we had a break even, I think, and then we had a 4 tick, so we got to 24. And then I think we had a bunch more break evens, and then we had another one, but we picked up 2 ticks to get us to 26, and that was what we had on the Russell today. I don't know what just happened to that chart. It looks like I lost everything on it. Okay, well, I'm not gonna fight over that right now. We'll go to the ES now. We had a couple of trades on the ES today. One of them was right here. We picked up 8 ticks on that, and we had a break even on that. We had some more blue arrows in there, but we didn't take any of those. Not that one, not that one. I'm getting into the training, and this was during the break. This nice blue arrow right here was during the break. You can see we only have the leading edge and the trailing edge of the ribbon in there. That was part of the training today. And I still don't know what happened to the Russell, but it doesn't really matter. Let's get into the NQ right here. Okay. We had quite a few trades on the NQ. The majority of the trades were on the NQ. So let's just go back to the beginning of that. I'm going to hold that and I'll go back this way so I don't mess things up again. I think I know what I did on the Russell. I think I'm going to go and find all the data down at the bottom. It's not. I think I grabbed it and dropped it all down at the bottom. Okay. So this is the NQ. Good. Quarter after this morning, and this was our first trade on the NQ. We picked up 16 ticks on that first trade, and we missed that blue arrow right there. And there's a trade in here that I stopped out on somewhere. I don't know where it is, but there was a trade in here that I stopped out on because we went from plus 16 to more. And then here we went, I think I picked up 4 ticks on that, got us to 0, and then we stopped out again. We went to minus 20. And then we didn't do anything for a few minutes. We had a break even. Then we picked up 10 ticks, went to plus 10. No, okay, that's not the way it went. Going back to the beginning. I didn't miss any arrows. We did start, I mean, that's the sequence of the gains and losses, but we started out there with a plus 16. Then somewhere there was a stop out, but I don't think I added this in, whatever that was, and we stopped out there. That put us to minus 4. Then I had a plus 4 to get us to 0. Then I had a break even. That might have been the plus 4 to get us to 0. And then I had to stop out minus 20. And then here I had a plus 10 to get us to 10. Break even, then a plus 30 to get us to 40. Then I think we got into the lesson plan. And we went from 40 to 52, then to 52 to 65, and then we stopped out here to put us back down to 45. And that was how the day went. Since then, the NQ is given one nice blue arrow right here. And another one there. And some nice green arrows in here, guys. Those green arrows are pretty nice in there, too. But we only had a couple of nice blue arrows in there. And so that was all good. All that was good. Yes, I did drop it down here at the bottom. So I was talking about, I accidentally moved the price down here to the bottom. And I don't know how to change it. Move chart, forward, back. I don't know. I do know how to change it. All right. So if you have, is that what it is in here? Oh, let's see. Let me try it again. Copy price, move chart. I know how to do it. I'll just go off of this layout onto another one. And then I'll come back. Reload without saving. And then I'll come back to it. And I'll start the live stream when we get back to it. All right, so that's taking longer than expected. It's gonna be Bert's old school stuff. This is what we used to trade with back in the day. That's what Dwayne still uses, right? Isn't that the old slingshot? The old slingshot and all that stuff. That's the old school stuff. All right, so I'll go back here, and my Russell should be normal again. There it is. Back to normal. All right, so I'm going to hit start a stream, and we'll start the stream for that. Okay. All right, the stream has begun. So, finishing up on what I was just saying, this morning we ended the room. Well, we got the goal for the day on the first trade. It was a Russell trade. I know I messed that up, and I think I can go back and show you that first trade on the Russell here. I think we'll see if I still have drawing objects in here. It's not looking. Oh yeah, they're there. Okay, so the very first trade that we took on the Russell is where we got the goal for the day. That's what I was trying to show you guys earlier. And I believe it was in the pre-market, or no, it was right after the open, I think. No, it was right before the open. It was right before the open. Yeah, here it was right here. This was our first trade of the day right here. We picked up 20 ticks on that. All right, so back into the trading. 26 on. And now the Russell is bouncing off the ribbon right there. That is a valid short trade right in there off the ribbon. So we can put this away where that. The reason it's valid short trade is because the black line is still in the red right here. All right, we actually, since this green line here, did we get a lower swing? Just a little bit lower. I did take the trade here. The green over shows here it is. I'm going to bump my stop to break even. Then I'm going to bump it to plus 10. And I'm going to leave it at plus 10, probably get 10. Well, the number on the downside would be right there, plus 20. That it should get down to. That's part of Thursday's lesson plan. Right? Learn how to read the down. Right? But we're out with 10. And I'm happy to take 10 ticks anytime I can. Now, the reason that was a trade is because the black line stayed in the red. We didn't get a pull out of the overbought, so we didn't get any kind of an arrow on this. All right, but we had a lower swing, and the black line stayed in the red on the pullback. We hit the ribbon, and it stayed in the red on the pullback. So that's a valid short trade. Again, we put in another lower swing right here. So we'll be looking for a pullback up to test the ribbon. Okay, possibly another trade in there. Okay, let me go and fix this one thing in here in settings right now. Go to settings, go down here and make this really thin. Apply to all. All right. So we are pulling back up. We're in the overbought. Now we're not touching the ribbon. So if we get a down close right now that pulls us out of the overbought, it's going to give us a black arrow. Give us a black arrow. And this would be a good black arrow. Now it's going to be a blue arrow because we've hit the ribbon. Okay. So it'll be a blue arrow now if we get that pulling out of the overbought right now. Now it'll be a green arrow because we've hit the black line. Okay, Joan, are you in here watching this? This is what we went over today, and you asked me to go over this slowly this morning. Just going to see if you're watching right now. I don't think so. Okay, well, this would be a green arrow now if it pulls out of the overbought because we've gone through the black line. It's come out of the overbought. Those got a high of 85.1, so you'd be selling 84.3 right now, like this right here. Okay, how do I know that? Well, I know that this is a 7-tick range bar. So I know the bar is going to close down, leaving the green arrow, and I know where my order needs to be. Now, it gave me some slippage because it always does. It seems like when I have a lot of contracts on like this. But that's okay. You expect that. All right. Now we anticipate it's going to go all the way down here to the prior swing low. So we start out with 10 ticks of risk, and we're anticipating we're going to gain all the way down to 2.7. So 14 ticks. At least down to 2.7 is where that should go. It should go through the prior swing low. And in tomorrow's lesson plan, we do leg lengths. And if you're looking at the leg lengths, I'm going to bump the stop to break even on this. Stop goes to break even after 4 ticks in profit. If you don't know the rules, then the rules can be found here at mytradingiq.com. You can get a break even on this. They can be found right here at mytradingiq.com. This is how you take the free trial also if you're watching the live stream. But the trade rules are right here. Go to mytradingiq.com, click on trade rules. These are the rules for the entry. That right there was a short trade, a sell with the slingshot. The black line, the ribbon must be on top and in the red or silver. In this case, it was in the silver. And the lead, the black line of the slingshot, must cross below the overbought level. It did do that. Okay. So we had that right there. And that was in the silver right there. All right. So it's a 7-tick range bar. On a 7-tick range, it starts out with a 10-tick stop that trails to break even after 4 ticks in profit. Right? Just straightforward rules. Exit. Look for the prior swing low. Step 1. Look for the prior swing low. And that was right here. That's what I was saying was 14 ticks away. Right? And then beyond that, learn how to read the DOM. And that is something you learn when you sign up with us or when you take the free trial. This is one day that I teach the DOM. Thursday is DOM day. Now, this has to put in a lower swing. So if we go back there to the rules, go back here to the rules and you go up here to the top, all trades must come after a higher or lower swing pivot. Okay, all trades. This one doesn't have one right now. We're at the ribbon right now. That's not a lower swing. This was. This is not. This was. Okay, so you could have shorted there, got a lower swing, shorted there, didn't get a lower swing, could have taken some profit on that. You know, I was talking more than I was trading, and I got my stop to break even. But we did get 10 ticks out of that first one. And we got to break even on the second one. We could have got another 10 on the second one, probably, if I'd have been paying attention. But now it's pulled back through the ribbon. And so now when this bar closes up, the black line right here, it went into a no trade zone for one thing, but the black line is also going to be in the green, I think. You can't really see it, but the black line is going to be in the green. Let me shut that off and turn it back on. See that space right there that you can't see anything? Now you can see it a little bit. You can see that the black line did get into the green right there, disqualifying all short trades, and it went into a no trade zone, also disqualifying all trades. So what was that? That's what you look for in a trade, and that's what you anticipate. That is how you anticipate what's going to happen next. Okay. All right. No trade zone, no trade zone. We're coming out of the no trade zone over here on NQ, but we're still not trending. Okay. The ES is not in a no trade zone. It's just barely got a lower swing. We need that to pull back. So we're getting closer there to a trade. Okay. Let's just here. Let's see something. I don't see any questions in the live stream right now. Yeah, no questions in the live stream yet. If anybody has any questions in the live stream, all you have to do is ask. If you want to see any other symbol or anything like that, just say so. We were talking last week, well, yesterday, all the way to yesterday. We're talking about what I thought was going to happen, or what we thought might happen when the CPI came out today. I was saying in the room yesterday, I was saying that yesterday was buying a rumor. And I said, at the end of the day yesterday would be a good time to buy some puts. Worst case scenario, you lose the puts, but best case scenario, what happened this morning happens. And that's kind of what I thought was going to happen. So we pulled all the way back down to here. Now, this isn't really the catastrophic thing that we were talking about that was going to cause a huge failure. But, we got a little bit of a wick up above the 5,000 level right there. And this is, never ever land. And all the way back down here is where it could pull to. Now, what they're saying is, any break in interest rates is going to be delayed because of today's data. So, I'm sure Dwayne's going to go into that in a lot more detail. And really, it provides a whole bunch of volatility for us in the morning session. So it's all great. I love it. Appreciate that. I mean, it stinks for everybody that's, got variable limit credit cards or loans or anything like that. Variable interest rate, I mean. There was something else I want to look at. Bitcoin. That's what I'm looking at, because Bitcoin was up near the top of that channel that I drew last week, and that we're going to put on a daily. Okay, up near the top of that channel, that blue circle that here it is. It's getting up there. So things are sort of coming together the way we thought they would. You gotta. And the markets kind of they repeat themselves over and over again. Everything we do is just stuff that's happened in the past. We're able to see it, learn from it. So on the Russell right now, it's put in a lower swing and it's pulling back up. We're in the overbought. So right now, this would be an okay place to take a black arrow if you got one. Okay, why do I say that? Because this right here is not anywhere near the prior swing high. And it's got a lot of momentum on it. It'll probably pull back. You see, I didn't move my cursor from you, so I didn't take a trade yet. But it'll probably pull back and hit the ribbon, and that would even be a better trade. But I was thinking this black arrow right here would have some momentum to it. That's what I was thinking. So now, let's bring a Russell over, and we'll take the trade. We'll put the trade on. It's got a higher of 82.8, so we're going to sell at 82.0. Why 82.0? Because this is a 7-tick range bar. If I know the top of the bar is there, I know the bottom is going to be right there. You see, it was right there. It just slipped me in. Now, this is a valid trade. It's got to go 4 ticks in profit for me to get my stop to break even It's gonna go one more tick, one more tick, one more tick, one more tick. There it goes. Okay, so now we can bump the stop to break even. Where should this go? I just told you a minute ago. It should go at least down here to 80.4. At least down here to 80.4. Okay. So I'll lock in a couple of ticks on this because I ended up taking the break even on that last one where I could have taken some profit. And at least down below the prior swing low. Now in tomorrow's lesson plan, we go over leg lengths. I started to talk about the leg lengths a few minutes ago. I think I don't know if I actually said it out loud, but I started to think about the leg lengths. This is the leg length that I put in this last one. I think that's a little bigger than the normal leg length. Right, the leg length we're working on. So I ended up with a couple of ticks on that. But I think that's a little bigger than the leg length that we're actually working on for the roll. I think, yeah, it is. Okay, if we go back, say we go back right back here. Okay, that's not the leg length. Like that. Okay, so then we bring it over here, and we hit that leg length right there. Went through it, and then we'll do it again right here. That's where it should go down to. All right, so far the Russell, we've got 10 ticks, a break even, and 2 ticks in this session. All right, and the Russell is the only one that's given us a trade so far. The NQ is going sideways inside the no trade zone right here. The ES is starting to move down. It's got a lower swing and everything here. It's at the midpoint between the zones. That's what this horizontal dash line is right there. The crude looks like it might give us a trade if it pulls back up and tests the rim, and we might get something there on the crude. Might get something there on the crude. All right, so on the crude, we want that to pull back up, test the ribbon. There it is. Okay, so the crude is pulling back up to test the ribbon. This will be our first trade on crude today. We haven't had one yet. 78.12 would go down. We'd be selling right now 78.04. 78.04. That's what that looks like right now. Okay, if the top stays there at 78.12 and the down close at 78.04 will likely be a trade. There's no guarantee though, because it might not come out of the overall. I think it will. I think it will. Okay. And the zone should act like this. Like a magnet should pull right back down to the zone. And if you look at the leg lengths on this one, another one just like it would work perfectly. All right, over here on the ES right now, we've got a high of 74.50. We'll be selling 72.50 on that. 72.50 on that. Now the high's got to stay here at 12. If it goes up, then the order goes up. Okay, because the bottom of the bar goes up. But it's becoming less likely to be a trade. The higher it goes, the less likely it is to be a trade. All right, so the ES is dropping right now, and if the ES drops down, it closes down right here, that will likely be a trade too. Same thing, green arrow here, green arrow here. Meanwhile, over here, the NEQ is almost pulled back, and it's going to give a black arrow long trade. Nope, now it'll be a blue arrow long trade. Now it'll be a green arrow long trade. No, it may not be any arrow long trade, right? But we did get both of those other green arrows. So we're short the ES, we're short the crude, and the NQ didn't give us anything. So the ES, we need 4 ticks in profit to bump that stop to break even. The crude, we need 4 ticks in profit to bump that to break even. Both of them should have 10 tick stops. Tick stops. Okay. So we anticipate the ES is going to get down to the prior swing low, down here to 70. All right, so we go one more tick. One more tick. It was almost And the crude's not moving in the right direction at all yet. The NQ is no trade on the long side. Okay, there it is on the ES, stop to break even. We expect that to get down to at least 70 right here. Okay, at least 70. All right. So we're just about stopped out over here on the crude. It's still got plenty of, it's got a little bit of room here, not plenty, but about half of the stop space we had allowed for it. We slipped, we're out of break even on the ES, and on the crude, we slipped 2 ticks from our entry point. Okay, we're going to break even on the ES. This is not a trade here. I know we have a green arrow here, but the outer bands are completely flat, so that's not a trade on the Russell. There's nothing here on the NQ either. And it is now 119, 119. All right. I don't see any questions coming in anywhere. If anybody in the live stream, we stopped out on the crude. My first trade on crude today. If anybody in the live stream has any questions about anything, you want to see any of the symbol, all you have to do is tell us what the symbol is. Just type in the symbol. I'm happy to go take a look at it. Right. Now, I think we got out of the box on the mister that we had been in. Right. It wasn't on the daily, but look, we got well out of the box. I guess it was on the daily. Got well out of the box, all the way up here to the prior swing high. Wow, that is a big move up. All right, so what does that do for the next leg is the real question. But once we get the pullback, you see I had selling pressure here before, and we had drawn in this level that it should get up to, up here. All right, hasn't gotten there yet. I guess we could still look for that level up there. Wow, so we got out of that box hard on the upside. The thing went flying. That was Mr. What was the other one? Mara. That I believe did something similar. Yeah, so we had all these 2 blue arrows to push down right here. Now the first one, if you didn't put in a lower swing from the first one, you don't take the second one. So the first one gave you some profit in it, enough to get your stop to break even. And this, we had this level way up here on. So it's got a ways to go to get up to there. They both had to get out of the funk that they were in. They had a deep retracement. They both had a really deep retracement. What were some of the other things that one fellow wanted to look at? You want to look at Microsoft, right? MSFT, Microsoft. And that's on a tear. Had a big gap down today, but it's on a tear overall on the daily. If we bump that down to a 30-minute, still gonna fill that gap down today, right there. Okay. Yep, NVIDIA and AMD was the other one. NVIDIA, 30-minute. We didn't get any gap today on NVIDIA, and NVIDIA's right in the middle of the ribbon right here. Yeah, this is all today. Oh, we did get a gap right there. We got a gap down, but it filled that gap right up. And it's like right in the middle of the gap right now. So this is kind of ugly the way it is right here. It's in a triangle right now. It's at the apex of the triangle. It's about to break out one way or another. My guess is it's going to break out to the upside, but that was NVIDIA, and AMD was the other one. Yes. Yeah. Well, I can draw one, and you can see it. You can draw a descending price channel right here like this. Do that one, and if we just copy it, we'll clone it. Is that what they call it? I can click it to clone it. Clone. And if we take this one, move it down here. Well, this is what you're talking about right here. So it is descending channel, and So it's gotta get out of here. It's gotta make up its mind which way it's I suspect it's gonna go up, but the other one was AMD. And this is the same thing, same kind of channel right here, down, down. You draw it from this one here, you're in a triangle. You're in the middle of it right now, in the apex of the triangle, the point. So it's gonna make up its mind. It was like that over here too. Don't go there. This is a 30-minute. But let's just draw this like this. Draw one like that, and one like this. That's what it was like. Ended up being out like this until it broke out of it on the upside. And then it took off, and then it came right back down, all the way down to here, and it found support. And now it's right in the middle of all this junk right here where it sat for 6 days, 3 days, I guess. So it's in the middle of the same junk right here. This one looks like it could go down from here, though. AMD looks like it could go down, and NVIDIA looked like it was probably going to pop. I don't know. Either way, we don't have a trade set up, so trade was in front of you, and nothing was in front of us on those. Wow, it's 124. Is Joan in here? I gotta make a meeting for Joan. Then look at Apple. It's been down throughout the rally. Go look at that. Apple Inc. Here it is. Let's put it on the daily. Okay. So Apple actually had a gap down today. A gap down right there. NVIDIA also had a gap down, I think, didn't they? And yeah, throughout, since the middle of December, we've got actually kind of a wedge going on here with Apple. You know, it's got some support right here, going across these bottoms right there. It's got some support, and going down the tops like this is what it looks like. It's kind of ugly. It's not really, from a daily, it's not looking like anything you'd want to get into. When you look at it on a monthly, it looks like something you'd want to short. Give black arrow, not monthly, but the 30-minute. Give black arrow yesterday, right up here off the ribbon, or pretty close to the ribbon. Big black arrow there, and it pulled back almost 50% retracement of that move down. Almost 50% would be right up about here, right in the middle of that gap. Be right at the BBC, really. 50% retracement, be right at the BBC. This is looking right here. See how the black step line got inside the MA1 right there. So it's time for it to pull back up to the BBC. That's what Apple looks like right now. To me, it looks like it's poised to move up a little bit and then have a big push down. So a little bit being like a couple bucks and then a push down about $5. This is what it looks like to me. All these, we had the green arrow right here, green arrow short, did not put in a lower swing. It stopped right there, like it was landing on something really solid. Is that 61? No, it's not 61. That's the midpoint. That's what that is. All right. Wow, 126. Okay. Okay, did you type something into it? I'm guessing you did, because it looks like he just pasted it. Okay. Because it looked like he just pasted in his question again. Yeah, because he posted something. It looks like, yeah, okay. I couldn't see what you had posted, that's why. And today they got a big storm there today, is what I've been told. All right. So, let's bump this back to 4, and just everything's flat right there. We don't have anything there. We're not, everything's flat over here. We don't have anything there either. We have just a couple of minutes left. The only thing that looks like it could give us a trade, we're in no trade zones everywhere. It looks like we could get a trade, possibly on the NQ, if it pulls back and hits the ribbon. This last one was off the ribbon right here. You could have taken a long on that. It didn't really put in much of a higher swing, but that's what it's looking like right here. The same thing right here. Really? Good. Okay. All right. D, haven't seen you in a long time. Any thoughts on the EQ? Is it going to test today's low? Just joined. Sorry, we already went through. Dwayne's going through that. D, if you go into, let me show you how to get into the thing that Dwayne's going to go through after I'm done with this. Okay. Because you can get into that anytime. Again, this is how you take the free trial with us, right? You go here to take the free trial with us in the room in the morning. Sign up for your free 5-day training now. But the part that Dwayne's going to be doing again, after I stop the live stream, anybody can get into this. So you hear both sides of this conversation that Dwayne and I are having right now. Go here to mytradingiq.com, click on the noon session. This right here, click on that link, and you can join. You can join that with Dwayne. That's free for everybody to get into. And really, anybody that's listening in a live stream right now, you should get into that, because then you hear both sides of this conversation that I'm having with Dwayne right now. I know right now you're only hearing my side, but you hear both sides of the conversation, and why I'm going to look at certain things. Yeah, so go here to mytradingiq.com. Halfway down the page, it says noon session, 12 Eastern time. Dwayne comes on and does that. Then at 12:45, I do the recap, and then I'm in the middle of this live stream right now. But this continues on after, this session continues on after I'm done with the live stream here in a few minutes. Okay, so Dwayne's going to go into that in more detail. Now, what I'll say about all that, the question was, any thoughts on the NQ or ES? Is it going to test today's low? Just join, sorry if you already asked that. My thoughts on the ES this morning were, the ES, we'll talk about the ES. This morning, my thoughts were it was going to get up, right? And then get rejected from there and go back down. That was my thought this morning. It didn't have enough energy to get up there. It was about a retracement. This is about a 25% retracement right here of today's action. I think 24 is actual fib extension, or 24%, something like that. That's what it looks like it got up to. I was thinking it was going to go higher and then get rejected. The NQ, I think it was going to get up into this area right here, which it did do, and then get rejected. And the Russell, I was thinking it would get up into the Russell. Come on, Russell. I was thinking it would get up into this area and then get rejected. That didn't come anywhere close to that area before it got rejected. So I still think that that's going to happen. I just don't think it's going to happen right now. I do think they're probably going to go down and visit today's lows. But this is a huge candle to go without retracement. Huge candle to go without a retracement. We're going to get some kind of retracement by the end of the week, I would bet. All the stuff I was saying yesterday, when we were talking about this, I was saying, at the end of the day yesterday, well, I said this in the room in the morning. I didn't say it. I didn't do the afternoon session yesterday. I couldn't. Doctor's appointment. But I was saying, at the end of the day yesterday was all the buy the rumor stuff. And I said at the end of the day yesterday, it's a good time to buy some puts, because when the news comes, I had a feeling it was going to be bad. And bad it was. We've been looking for some catalyst for the market to start crashing. And this could be just the beginning. As they start putting off the interest rates, because this is just the beginning of that. Starting to put off the interest rates and stuff like that. Interest rate cuts. And then they're going to start saying the amounts of the cuts are going to be smaller. And then I didn't think it was going to be a news event that was going to trigger the beginning of the going down. And it still may not be. We could have 100% retracement by the end of the week. We have PPI coming out tomorrow. Is it tomorrow or the next day we have PPI coming out? I don't expect that that's going to be anything to save anything. But yeah, I think we're going to see lower prices. D-red. Deared. All right, it's 1:32. I run with, and I have another meeting coming up, so I gotta wrap this up. Okay, so if you have not taken this and you want to take a free trial, let's go here to mytradingiq.com, mytradingiq.com. right here, the purple button for me right now, 9:15 to 11:30. Click on that. There's no credit card required. It says that right there too. No credit card required. It's going to bring you to this registration page. Put in your information right in here. Down at the bottom, if you have TradingView, give us a TradingView login ID so we can enable the indicator set for you. Okay. If you have Ninja, give us your machine ID. So at some point, when they give us our permission back, we'll be able to give them permission for that too. I did send them an email today, Dwayne, about that. And
I'm sorry.
Yeah, Ninja Trader. I sent them an email because they still haven't re-enabled the stuff that they disabled on Friday.
All right. Well,
but
we submitted it, so
yeah, it's all good. All right, so that's how you take the free trial. Now, D, or anybody watching the live stream, if you want to see what continues after this, I'm going to shut the live stream down, but the room is going to continue. The one that Dwayne is in right now is going to continue until he's done going over the trades. So if you want to see what his big picture stuff is, get into that room right now. Click here and get into this room right now. Okay, just fill out this form. This is a very simple form. You only have to do this once. The room is free. Just get in there and it's free. Okay, get in there and you have Dwayne's big picture view on all that stuff. All right, and that is going to be that. With that, I can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
yep. Recap of the morning session.
Today it took 10 minutes and one trade to get to $1,400.
Good job.
Thank you.
Very good. Okay, we left off on Russell. And as you can see, we had this massive down candle that Michael was talking about. Now, as we sliced through several zones, but as we sliced through this, when I ran out of steam, we retraced back to the zone we sliced through, and then we continued dropping to the zone, to the tick. The zone 67/68. Weekly trading zones are published Monday morning, 6:15 a.m. Eastern. We've published the zones every week since December 14th, 2009. Our members and trial members get them Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. The price moves up to a zone, we expect resistance, proven otherwise. Okay. Price drops to a zone, we expect support until proven otherwise. This is a huge anomaly over the less than positive news that came out this morning. But once we got to this area, we went from zone, down to the zone, back up to the zone. Now, the step line I mentioned earlier crossed red and falling, which would typically indicate a pullback to the BBC. Price always reverts to the mean. Notice the step line is hooking down. Okay, so chances are we'll find support down around this area. Wherever red and falling is, price has got to take out that low and that low. And then there's potential support here, and obviously there's support at the zone 67/68. And there's one more zone below for the week down at 1911/1912. That's an old zone from a previous week. All right, in Q. This is where we opened last night. Price pulled up to the BBC. Pullback holes more often than not, as it did here. Blue and climbing turned to red and falling, and that took us right down to the CTA short target. We hit the zone, consolidated a little bit, continued dropping. Even in a huge down move like this, price travels in legs. Leg, retrace. Price always reverts to the mean, whether we're pulling from above or pulling from below. When we pull back to the BBC, From above, we expect support until proven otherwise. When we pull from below, we expect resistance until proven otherwise. So price did not make it all the way up to the BBC on the pullback because it ran into resistance at the zone. Remember, when price moves up to a zone, expect resistance. When it drops to a zone, expect support. Except the support. Well, actually, what this candle did was it sliced. Only three things happen at a zone. 70% of the times consolidation, 20% of the time rejection, 10% of the times the slice. So this candle on the 30-minute chart sliced through the zone like it wasn't even there. But it ran out of steam right here. And so the next candle retraced back to the zone, sliced through, and continued in the direction of the slice. It's typically how that works. So now you're looking for price. See, we had the step line cross red and falling, but we did not get a pullback all the way to the BBC. We only made it to the zone. Now the step line is pointing down. So there's a window of an opportunity right here from 17,660 down to 640. That's 20 points at $20 a point. That's $400 per contract traded. And then you've got potential support here. And then you've got a lot of room down to the next zone. This is the lowest zone for the week. Okay. Now, for those that weren't tuned in early, this is what we talked about yesterday. We had a green candle yesterday during the broadcast. We said how the market closes yesterday would be very important, as it is every day. Okay. And after having a green candle and having to adjust the fibs to compensate for the new all-time historic high, we closed below the 50% extension. Then we got below the step line and blew and climbing. And we said to look for support first at the 38% fib extension. Earlier, when we looked at this, we had some wicks showing down here. We had hit the 38 and bounced. Now we're back to the 38. The next area for support is 49.35, right there at the daily BBC. 49.35. Okay, it's right there. If we trade through the BBC, these lows are potential support. Then we're at the 24% fib retracement. These are fib extensions. These are fib retracements. My thoughts are, I don't know how long it'll take, but pretty sure we're gunning for this 50% retracement at a minimum. Okay. And around 4,600, 4,617. Fibs are an area. Okay. All right. So we covered all the indices. Crude. Here's where we opened last night. Above the BBC. Price got above the zone. Retraced back to the BBC. Hit the target. And ran into a brick wall at the zone. Remember, when price drops to a zone support, up to a zone resistance, until proven otherwise. So we go from support here at the BBC up to resistance at the zone. Resistance will send the market looking for support, which it found at the zone. From support, resistance, back to support. Now we've overcome this weekly zone. The highest weekly zone is the same as last week's, 80/8005. Okay. But before you can think about traveling to this number, you've got to overcome this. Okay. Not by a tick, not by a point. You've got lots of room up here. So let price take out this very important area. Take it out. And then let it pull back to that area. And if you find support on the pullback at that area, then you just go long. Get your goal for the day. Put the mouse away. On goal. Here's where we opened right at a zone last night. Price just consolidated at the zone for hours. And then here's that perfect stack. Price, step line, blue and climbing, BBC. And up we go. If you waited to this candle to get in, when we open that here, 2035, $300 per contract trade up to the target. And we hit the zone and consolidated for 1, 2, 3, 5 candles, 2.5 hours. Then got this crazy reaction from the news. I mean, this is why we teach everyone, don't trade news. Okay? Watch it. See what happens. But you don't have to put yourself at the mercy of the market. Just be patient. Let the market resume its normal rhythm. Okay? Now, the step line has crossed, so typically price will retrace back to the BBC, which we expect to be resistance, no proven otherwise, and that would then give us another leg to the downside. And this is the lowest weekly trading zone this week. Gold. Silver. Wild day for silver. When the price of silver moves $1, okay, from $23 to $22, that's worth $5,000 per contract traded. Here's where we opened last night. Here's that perfect stack. Price, step line, blue and climbing, BBC. Took us right up to the zone. Rolled over. Then came the news. And here we are consolidating just below the zone. The step line has crossed. And typically that would give us a retracement back to the BBC. But this news today is so severe, the market is in no way behaving in a normal fashion. Got a red candle here. You're below the BBC. Could you short 22.10 down to 22.08? Good. 2 pennies. That's all you need to get your goal for the day. Euro. Here's where we open. Bearish cross. Price drops to the weekly trading zone. And it pops back up to the area of the bearish cross. Resistance sends us back to support. Support sends us looking for resistance, which we find at the zone. And then the calamity. Now price is wandering sideways. But it looks like it wants to drop further. Under normal market conditions, price would be pulling back up to the BBC. Now remember, if we break the 38 as support, your next area for support, big picture, 49.35, daily BBC. Then 48.66. Then 48.54. To become a lifetime member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. The passport, that's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. No recurring fees, no upsells, no nonsense. Pay it once, remember for life. 9 out of 10 new traders fail because they don't have anyone to teach them how to do the job. They buy indicators, they buy oscillators, they pay $7,000 to go to a seminar somewhere. But that's not the same as having a living, breathing teacher training you every day for 2 hours in live markets, interactive markets, where you're trading along, asking questions, until you get to the point where you get ready to ask a question and you go, oh, I already know the answer to that question. Because our methodology is very simple. There's only so many questions you can ask. And at some point, you're going to ask all the questions, you'll know all the answers, and then all you have to do is follow the 24/20 blueprint. Along with 2 hours of live training every trading day, you have access to unlimited one-on-one private mentoring. The strategy that you learn and the indicators that you own for life as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support, resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. Also, as a passport holder, you'll receive the Logic 247 alerts, concierge trade alerts. You'll be able to attend the members-only workshops on Thursday night, and you'll have access to all the previous workshops. Everything a trader needs, all under one roof, one low price. Just go here, mytradingiq.com. Again, if you have any questions, call us or email us. 949-42-EMINI, support@cfrn.net. Okay, let's wrap it up with a good word for the day. Today's topic, start living with purpose. Proverbs 11:25 says, a generous person will be prosperous. Now that seems like counterintuitive, right? But wait a minute. If I give it all away, I'd be broke. It's not what the Bible says. It says a generous man will be prosperous. And you might say, well, if I was prosperous, then I'd be generous. But that's not what the scripture says. Think about that. One of the best ways to keep your life in balance and stay on track spiritually is to pass on what you know to others. The Bible says a generous person will be prosperous. As you pass along your insights, you will get more insights from God. Paul challenges Timothy in 2 Timothy chapter 2, verse 2. The things which you have heard from me in the presence of many witnesses, entrust these to faithful people who will be able to teach others also. If you know people who haven't discovered their God-given purpose in life yet. It's your job to share with them what has been shared with you. For example, don't just listen to this devotional and keep it to yourself. Share the knowledge you gain with those around you. The more you know, the more God expects you to use that knowledge to help others. That's how things are supposed to work in His kingdom. James writes in James 4:17, "So whoever knows the right thing to do and fails to do it, for him it is sin." In other words, increased knowledge brings increased responsibility. Passing along the purpose of life to others is more than just an obligation. It's one of our greatest privileges. Imagine how different the world would be if everyone knew their calling. That's why Paul writes, 1 Timothy 4:6, "If you instruct the brethren in these things, you will be a good minister of Jesus Christ." Not only does God want us to live out His purposes, He wants us to help others do the same. That is what assignment-centered living is all about. Regardless of your age, the rest of your life can be the best of your life if you'll do this one thing. Start living with purpose. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.